Right. Hello and welcome to Accounting 605. This is the Accounting for Managers course in the MBA program here at UMGC. Happy to have all of you with us, joining us here in the virtual classroom, and I appreciate a couple of you joining me live. This is awesome. I really appreciate that. And my goal is to kind of host these sessions once a week, the beginning of each week, which for us is on a Wednesday, probably around this time. And so, what we'll do in these sessions is we'll just kind of talk about what it is that we got going on for this week, and we'll talk. I'll give a short lecture about the content, and also provide you with some additional information when it comes to the templates and additional, and hope to answer any questions you might have. So that's the overall intent behind these sessions. So I appreciate you joining us. So first and foremost, what we're looking at right now is the classroom, and so here in the classroom, I do want to show you a couple of really important things. Number one is you'll find that I post a lot of announcements on a very regular basis. Each announcement's pretty important overall. Maybe not so much like the welcome and the reminders, but those are in there. But I do also post things like updates to templates and maybe some real I don't know, helpful pieces of information. So those announcements are going to be really helpful for you. I also want to call your attention to the in the classroom to the syllabus. Hopefully, you've already had some time to review it. If not, definitely take just a little bit of time. Some real important pieces of information. First and foremost, this is my email address is there. Feel free to email me anytime. I'm usually pretty fast to respond. You'll notice it's usually within a couple of minutes if I have the opportunity to read it. Otherwise, maybe a few hours. And if you email me during the overnight hours on the East Coast, I might not respond until the morning. So just keep that in mind. But yeah, feel free to email me anytime. You could also message me through the classroom, which some students like to do. Totally cool with that. Or you could call me. My contact information is on the homepage. So whatever works for you. If you decide to text me or whatever, that's fine. Just keep in mind that if you call me, I probably won't answer because I'm not going to recognize your phone number. Um, so if you do call, leave a voicemail, or at minimum, if you text me, tell me who you are and what class you're in. So that'll help me to to address you as quick as I can. Uh, while we're looking at the syllabus, just kind of give you an idea of what this class is all about. The way I look at accounting for managers is it's really a foundational class for financial and managerial accounting. This is not a deep dive by any means into accounting. You're not going to become a CPA or an expert in accounting by taking this class alone. Okay. This is just really that foundational knowledge that every good manager needs to know about accounting. That's the whole intent behind the stuff that you're learning in this course is to provide you with the skills you need from an accounting perspective to be a damn good manager, right? That's the whole idea here. So I want you to be an awesome manager, and being able to analyze your company's performance based off of the income statement, balance sheet, statement of cash flow, statement of retained earnings, being able to interpret that data and make good decisions, right? That's the whole idea behind this course. And so you're not going to become an expert in it by any means, but you will become an expert when it comes to analyzing the financial performance of the company. And that's the overall intent behind this course. This is a relatively brand new course. The entire MBA program has been redesigned and relaunched in the fall of 2024. So you're a few of the first students to be able to go through this course. So just keep that in mind as well. When it comes to the course materials, everything in this course is open educational resources, which you'll find under the content area. There's nothing you need to purchase for this course or anything like that, so don't worry about that. This course does require a lot of work, as I'm sure you're noticing, but so does every course in the MBA program. So that shouldn't be anything surprising to you as a graduate level student. In the graduate level, we would expect there to be, several hours of dedication each week to each course. So on average, I find that students that take this course spend anywhere between 10 to 20 hours a week uh, on the course. And that includes things like going through the reading materials, taking care of the assignments, the discussion board postings, all those things. So it sounds like a lot of time, but in respect, it's probably not a whole lot of time. So so take that with a grain of salt. Some students will take more time, some will take less. It really depends on the skills that you come in with, right? So that's kind of about the average. Each week we have discussion boards that you need to participate in. There's one graded discussion board in each week, and your original post should be taken care of over the weekend and responding to two classmates by Tuesday night. Is how those are designed, and you'll notice that when you jump into the discussion board area, which we'll talk about briefly. When it comes to lateness, so a couple things to be aware of. Just like your employer wouldn't want you to submit work late, I don't want you to submit work late either, right? I remember, as a financial controller, when I was a financial controller, I gotta tell you, if I submitted something late to my boss, they would not be happy, right? So it's kind of the same concept applies here, right? So I don't want you to be late with stuff, but if you have to be for whatever reason, and you and I didn't talk about that first, expect there to be deductions in your points. Yeah. 5% per day that it's late, and that's pretty fair. So please make sure that you adhere to all the deadlines in the course as best you can. If you need an extension for whatever reason, talk to me. I'm a very reasonable person, but I can't go beyond a week with respect to any type of extension. If you're military and you're going to be deployed, or you got orders for training or whatever, let me know in advance so that way I'll work with you, and we'll get you squared away with any type of extension that you might need. With respect to the discussion boards, there's no extensions for discussion boards. Those have to be done on time. If you miss a discussion board, you don't get any points. If you participate in it late, you won't get any points. So when it comes to discussion boards, there are no exceptions when it comes to the lateness. So just keep that in mind. We don't have any graded quizzes or exams in this course. The grades stem from your discussion boards and from your assignments, your weekly assignments. So let's talk briefly about those. Each week you have a assignment. For example, in the first week, you have to complete the Excel workbook template, and you have to write an executive summary. Those two together equal your first assignment. Each week is designed in a similar way. So for the subsequent 7 weeks in this course, there's going to be one Excel workbook with a template and an executive summary that you have to write. With the exception of week 6, I think it's week 6, that has a PowerPoint presentation and I think an executive summary, or I'm sorry, a report. That's in week 6. And in week 8, you have your executive summary, the Excel workbook, and what we call a cumulative assignment, which is kind of like a collection of all of your prior week assignments in one workbook and in one report. So it's kind of like, think of it as like the capstone to the course, right? So take some time, read through the syllabus, read through the project descriptions, or assignment descriptions, and I'll give you a really good idea of what we're covering in this course. As I had mentioned earlier, this is really designed to be a foundational level experience when it comes to utilizing um, accounting from a financial and managerial perspective. So if you have an undergraduate degree in business and you took financial and managerial accounting or principles one and two or whatever your university called it, um, that's great. You'll have that foundational knowledge with you, or maybe it's been some time and you need to brush up. But either way, you kind of have a pretty basic understanding. If you have an undergraduate degree that's not related to business, which a lot of MBA students tend to have, then this course might be a little bit more challenging for you. Maybe you've never had an accounting course at the undergraduate level. And so in that case, it's definitely important that you spend a little bit more time in this course in terms of reading and understanding the content, right? Because that's going to really help you in the long run. So just keep those things in mind as you're working through. Coming down the syllabus, one of the other things I do want to touch on quickly is in relationship to AI. Artificial intelligence, as you know, is kind of embedded in just about everything we're doing these days. I see it all the time. I use it myself very extensively. Um, and so I'm okay if you want to use it for this course, but I want to cautious you as to how you use it. What I mean by that is it's important to understand that whatever AI tools you're going to use in this course, that it's not going to have the most recent information at all times, and it's not always going to be accurate. AI has the tendency to hallucinate when it comes to the way that it generates content. So just be mindful as to your use of AI. Um, Again, for creativity purposes, yeah, go for it. It's a great tool. But be very, very cautious as to what it's generating and how it comes out. So for example, if you use AI to help you to, let's say, find the current ratio for your selected company and you put it into your Excel workbook, it might not be accurate. Okay, so be very cautious, especially when using it for calculations. So that's my little spiel on AI. You can use it definitely, but just be very, very cautious. I do notice that some students like to use it in their discussion board posts. Um, just know that I'm going to ask you questions. Okay, so if you use it for your writing, especially if you use it um, in the executive summaries or in your discussion board posts, I'm going to know that you used it because I know how AI writes. So just know that for one. And two, I'm going to ask you questions. So if you can't answer the questions I'm asking you, there's a good chance that you probably used AI to help you write the whole thing. And that's not really not too cool, right? So once again, you can use it to help you, but don't rely on it. Okay, this is not a tool that you want to use as a crutch. Okay, it's just I want you to learn the stuff, not just regurgitate what AI tells you. What else can I tell you about the syllabus? Toward the end of the syllabus, well, I guess you hopefully you probably already know this. If not, this is good to know. You need a B or a higher to pass this course. There are there are a bunch of graded components in this course. Scrolling back up to the graded area, you'll notice that we have eight cumulative assignment. I'm sorry, eight regular assignments, one cumulative, and we have eight discussion boards that are graded. So, what does that mean for you? You can earn an A, a B, or a C, which C is technically passing. Anything below a C obviously is not passing. If you earn, let's say, throughout the 8 weeks, let's say you earn, I don't know, three C's, two B's, and the rest are A's. Cumulatively, looking at all of the work that you've submitted and has been graded, as long as that cumulative score is 800 or higher, which is a B or higher, you pass the course. Okay. So don't freak out if you earn a C on an assignment. It's not going to be the end of the world. You didn't fail, right? You just didn't do great on an assignment. That's okay. Hopefully the rest of them are better, right? And that's the whole point that I'm trying to get across. So don't freak out if you get a C on an assignment. It's not going to be the end of the world. And also, it's important to understand that not all students are going to get an A in this course. That's just not feasible. Okay. Um, you really have to be like a top level analyst for you to earn straight A's in this course. It's rare. It happens, but it's rare. Um, there's rubrics for everything that's graded in this course. So if you understand those rubrics, you'll be able to really understand what your work is like, and what score you could potentially earn, right? I don't do anything. Everything is done by the book with me. There's no curving. There's no extra credit. There's none of that stuff. None of that stuff happens in this course or anywhere in the MBA program for that matter. There's no extra credit opportunities. There's no curving. Okay, so what we mean by that is the scores that you earn are the scores that you earn. So just be aware of that. Just be as you're moving forward. Um, when it comes to final grading, yeah, if it's within point 0.5, yeah, we're going to round up, obviously, but just be aware of that as well. We always round up when it's point 0.5 or higher. Um, let's see, what else can I tell you? At the bottom of the syllabus, this is basically a nice outline of all the topics and what's being covered in each week. Once again, you'll notice the discussion boards covered in each week, and then we have the assignments, one in each week, with the exception of week 8, which has two. And this is kind of an idea of what we're covering each week. So this week we're going to talk about, financial accounting, very, very high level stuff. Next week we'll do financial statement analysis. The third week we'll look at assets, current assets. The fourth week will be fixed assets. Fifth week will be short-term, long-term liabilities. Week 6 will be equity. Week 7 we'll look at the statement of cash flows, and week 8 we pull everything together with some ratio analysis. You'll notice that in each week there's going to be some ratios that you'll calculate in Excel. Very, very common. And as managers, we calculate a lot of ratios to really understand our company's financial performance. So those are built into each assignment. But that's an overall sense of how the course is laid out. For those of you who are following along and you know something about accounting, you'll notice that we're following really the balance sheet here. So look, we're looking at income statement, balance sheet, statement of cash flows week 1. Then we follow the balance sheet, assets, current assets, long-term assets, or also known as fixed assets. That's on the left side of the balance sheet. On the right side of the balance sheet, we have our short and long-term liabilities and equity. Week 7, statement of cash flows. And then we pull it all together with ratio analysis. So that's the overall course design. Take your time, look through it, read through it. It's really good stuff. Next area I want to call your attention to is the content area. Obviously, my screen looks different than yours, just because of our different roles. But as we can see, we're currently in Unit 1, beginning today, going through this coming Tuesday. We're in Week 1, Unit 1. So definitely follow along. Go in order. It says start here, start there, right? So go in order. This is really important stuff. introduction to what it is that we're going to talk about this week, the learning objectives, and then we jump into the skills. These are the type of skills that we're assessing, and we assess these skills the uh, through the discussion boards, through the um, Excel workbook, and through your executive summary. So these are the type of skills that you're assessed on, and there's skills associated with each week. Uh, and then coming down, you'll see what it is that you have to do for that respective week. So for this week, we see a bunch of learning resources for you to read through. There each week there's what we call a test your knowledge. These are ungraded. Um, these are ungraded. What do you call? Um, the knowledge checks. They're just simply, uh, 10 randomized multiple choice questions, just kind of seeing what your foundational knowledge is like. Ungraded quizzes, yeah. And then we also each week we have a discussion board. Your initial post for each discussion board is due on Friday of each week, and then you want to respond to two of your classmates by Tuesday night of each week. And then your overall assignment, which includes the Excel and the executive summary, those are due at the end of each week. So this coming Tuesday is when you'll submit Unit 1. But you'll notice that each week is laid out pretty much the same way. Obviously different content, just a similar format. With respect to learning resources, yeah, definitely read through these. These are super, super helpful, especially for those of you that it's been a long time, or it's been some time, or maybe you've never had accounting before. So definitely really, really good stuff. Especially, you'll notice that everything that you learn about in the respective week is directly related to your assignment. So really, really good stuff to read through. And there's going to be usually several pages of it at each week. You don't have to read every word, but definitely look through it. So since we're in week 1, the very first thing that you're currently doing, or should have, some of you have already done it, or you're in the process of doing it, is to select a company. The first thing you want to do is select the company you want to work with and this is throughout the entire course. You're going to use the same company. So you'll notice that a lot of your classmates have already begun their company selections, and I go through the process of reviewing the link, making a decision to approve or deny, with reasoning, of course, and then I'll usually ask you a question like, "Why are you interested in studying this company?" Right? So I'm always curious as to why students select companies that they do. And the responses are really interesting. You'll notice that some students like the idea of selecting the same company, but you can't. It has to be a unique company, which makes it even more fun, right? So definitely, if you have not already, look through the list and see what's still available, because each student must select a unique company. I created this today, which I find is very helpful because, yeah. So what I have here is each student's name in the class, and then the company that they've selected, and a link to that company. So if you haven't selected yours yet, just know that these are the ones that have already been selected, so you cannot choose those ones. It has to be a unique company, which I see a lot of you have already done. So thank you for that. Uh, this will be exciting, I promise. It's a great, unique learning opportunity. So once you've selected your company that you're going to use throughout the semester, then you'll once you've started reading through, you're going to jump into the first graded discussion, and you'll create your post, right? And it's going to be based off of what this is asking you. So here's your discussion question. You're answering that question or those questions. You'll make your post, and then you'll have somebody like myself and your classmates will respond to you I'm sorry, Elvis, I'm going to pick on you briefly. But so this is Elvis's post, reading through, looks awesome, very cool, a lot of great detail. And so, good job with the references, all that's really important. You'll see that a couple of the classmates are responding. Nice work, Chelsea. Very nice. Nice work, Tamara. Yeah, awesome. And I'll also typically, respond to a couple of posts, and I'll ask some questions, right? So I'm always interested in this type of stuff, and why it is that you post what you do, and so I'll ask you engaging questions. So feel free to respond. I love the back and forth. It's always exciting, and it helps you to get some deeper insight. I also typically try to provide you with maybe some additional things to look at. You might want to consider, X, Y, and Z. Just some things to think about, right? And this will ultimately help you with your assignment. So that should be something you should be doing by Friday night is your original post for Unit 1 discussion. And what else can I tell you? And then we'll jump into the assignment. But before we jump into the assignment, I want to provide you with a very brief lecture on this topic, because I think that this is a really important foundation topic for you to understand. And so I'm going to provide you with a very brief lecture. I created this PowerPoint presentation relatively recently. And so I think this will be really helpful. I'll post all of this in the classroom along with the recording. So watch out for that. But I just kind of want to show you the type of stuff you should be looking at to help you with your assignment for this week. So the first thing that it's important to understand is, ultimately, what is accounting? Why do we study this topic? Why is this something that is involved in every single business? Um, and as we say, accounting is an information and measurement system that identifies, records, and communicates the organization's business activities. Awesome, right? This really is the foundation of every single business. Every business on the planet has an accounting system. They need to be able to track all of their revenues and expenses and all of their balances. And they do that by entering transactions, right? They enter the transactions that have occurred. And ultimately what they're doing is they're measuring the events that have happened within the company. Right? That's the foundation of accounting. Every business on the planet has had some type of accounting for the past 3,000 years. All right. Um, even back in the earliest of days, they would trade like they would do trade, because not every person had the ability to pay in shillings. So they would do a trade, right? So, but we still had to record that trade because even back in the earliest of days, there was some type of tax system involved. And so we had to pay the taxes somehow, and they would try to figure out how much we needed to pay. And so that's what started this whole thing called accounting. Fast forward, 3,000 years, here we are today. We have software that helps us to track all this. We got Oracle, Sage, QuickBooks, any off-the-shelf type of accounting software. There's about like 500 of them these days. The most commonly used in the United States is QuickBooks. About 85% of small businesses around the world use QuickBooks. Oracle is heavily used by the Fortune 500 companies, larger companies. And then there's like a bunch of other ones that are used. What they do is they help us to identify, record, and communicate these transactions, right? And so that's ultimately what accounting is. We're record keeping or bookkeeping all of our transactions, and that's a huge part of accounting. That's really what it boils down to. We oftentimes refer to accounting as being the language of business. We call it because all organizations set up some accounting information system to communicate their data. This helps people to make better decisions, that our managers to make better decisions. And the accounting information really serves two groups of people. We have what we call external users. These are people outside the company, external to the company, people outside the company. And we have internal users, people inside the company, right? External users, people outside the company, they use accounting information that's they do not directly run the organization, obviously, and they have limited access to the information. People outside the company have limited access to company data. So they use what's called financial accounting information. This is the income statement, balance sheet, statement of cash flow, statement of retained earnings, and they're published. They're for a publicly traded company, that's published information. That's what's you're going to find inside your SEC 10K report. You're going to find their published annual income statement, balance sheet, statement of cash flow, statement of retained earnings, along with some notes and a lot of other really good information about the company. External users use that type of information to help them to make decisions. So, for example, a shareholder is an investor. And as a shareholder of Starbucks, which I am, and many other companies, I look at their filings, their SEC 10K. I'll look at their investor relations page published on their website. I'll look at MSNmoney.com or Yahoo Finance or whatever's to really get a really great understanding of the company's direction, what the future stock prices will look like, what the analysts are saying, that type of stuff, right? So really, really important information to the external user. Other external users are banks, the lenders. That they have to make a lending decision based off of their filings to see if the company is worthy of a loan, right? Uh, External auditors, these are people outside the company that audit the company to ensure that they're transparent, honest, and they're not doing anything nefarious because we have to protect our shareholders. Not a managerial employee, so somebody who works on the front line of the company, probably interested in what the company is up to, how they're performing financially. Like, for example, let's say the barista at Starbucks is interested in how the company is operating, right? Why would they be interested, you might ask? Well, if they're working for the company, they want to know that this company's stable, for one. So that's why they might be interested in looking at the financial statements. And then we also have regulators. That's our fun people at the government, at the SEC themselves, the IRS, the whoever else, right? FCC, all of those fun regulators. They're obviously going to be interested in what the company's up to as well. Voters, government officials, etc. External users make business decisions depending on the information that the company publishes and the fact that it's reliable, relevant, and comparable. So those are your external users of information. And then we have our internal users. These are the people that work for the company. This accounting information is used directly by management of the organization, by people like the CEO, the CFO, CIO, COO, everyone in the C-suite, right? And then we have our department level, our VPs, department level managers, frontline managers, assistant managers, and even our frontline employees. they use this type of information to make decisions. So, internal reports are designed for the unique role of management and executives to make decisions. Now, what you'll find is that on the internal side, we call this managerial accounting. And that's because we don't just have access to the company's income statement, balance sheet, statement of cash flow statement, retained earnings like the external users do, but we also have inside information like the company's budget, uh, and their cost of manufacturing, their etc. Like there's a lot of internal reports that are not published, not publicly available, that management uses to make decisions. And so ultimately, this type of information helps people within the company to be effective and run the business effectively. Managerial accounting on the internal side serves the decision-making needs, right? That's the whole point here. Examples of internal users include people like purchasing managers, HR managers, production managers, distribution managers, marketing managers, service managers, R&D managers, etc. All of these are people inside the company, and they need to be able to make decisions. Sorry, somebody's at the door. Um, so all of this information that we just talked about, this is going to help you with task one of your assignment for this week. The next part I want to talk about are the financial statements themselves. And so we'll talk about the financial statements and how they're calculated and all of that cool stuff. So this section shows you how financial statements are prepared and how we analyze them to some degree. So the first financial statement that gets prepared is our income statement. Our income statement describes the company's revenues and expenses, and we use it to compute our net income or loss over a period of time. And income statements are super important because it gives you a breakdown of all of the revenues and expenses. So we have our revenues minus our cost of goods sold equals our gross profit minus all of our expenses equals net income. And it gives you a really great detail of information, and that's derived from all of our transactions that we enter into our financial system. So the income statement's made from all of those transactions we talked about earlier. The next report that gets generated is called our statement of owner's equity, or stockholders' equity is what you'll probably see it as. And this reports how retained earnings change from period to period based off of the net income and any dividends or withdrawals over time. So here we can see that the statement of owner's equity or stockholders' equity starts with the beginning balance, beginning capital balance plus any investments minus plus net income minus any withdrawals. That gets us to our ending balance of equity, of owner's equity or stockholders' equity. This could be somewhat complex of a report. When you're looking through your 10K report, you'll see a lot of changes in equity, and that's based off of the buying and selling of shares of stock in the company, and also maybe some other financing components you'll notice there. So just be careful when you're reading through that. The balance sheet is the third financial statement that we prepare, and it's based off of our balances. That's what a balance sheet shows us. It describes the company's financial position with respect to the assets, liabilities, and equity at any given point in time. Assets are what the company owns. Assets are what the company owns. So that would include things like cash, accounts receivable, property, plant, and equipment, also known as fixed assets, things the company owns. We call those assets. Just it works the same way in personal life, right? Assets that you have that would be like your vehicle, your house. These are assets, right? Yeah, it works the same way in business. What the business owns. Liabilities are what the business owes to someone else. Owes to someone else. That's a liability. We owe wages payable, accounts payable, taxes payable, long-term liabilities like loans, etc., right? Mortgage is a liability. For your personal life, student loans a liability, right? You owe it to someone else. So liabilities is what the company owes to someone else. And equity, the way I describe equity is what the owners own. That's equity, what the owners own. And you'll find things like paid in capital, common stock, preferred stock, etc. Those are what the owners own. That's what you'll find on your balance sheet. And we'll talk a little bit more about that when we look at a couple of examples. And then we have our statement of cash flows. The statement of cash flows represents cash coming into the business and out of the business. Cash coming into the business and out of the business for operating activities, operating activities, investing activities, and financing activities. Operating activities, those are the day-to-day operations of the business. So cash coming in from your customers and out for your day-to-day operating expenses. Investing activities, that's cash coming in from the sale of property, plant, and equipment and out for the purchase of property, plant, and equipment. And financing activities is cash coming in is we took out a loan or we sold shares of stock or we did some other type of finance move. And then cash going out of the business for financing, that would be things like the payment of dividends, the repaying a loan, etc. But it just kind of gives you a really basic understanding of what the financial statements are and what kind of almost what they look like. I'm going to show you more of what they look like over the next couple of slides. So here we have just a nice visual representation of how the financial statements are related to each other. So we can see that the net income from the income statement will show up on your statement of owner's equity because we add the net income into the statement of owner's equity, which ultimately helps us to derive our equity balance, right? And then the equity balance, that's going to show up on the balance sheet under equity, right? So this kind of shows you the relationship between the income statement, the statement of owner's equity, and then the balance sheet. And then we can also see the relationship between the balance sheet, our cash balance, being our ending balance on our statement of cash flows. So this kind of just to show you how the financial statements are all interconnected. This next slide here, again, is just a real quick summary of those four financial statements and what they are. I think we talked pretty good about these, so we're not going to go through them again. But looking at it, income statement is going to show you all your revenue and your expenses over a period of time, usually about a month or a year. Statement of owner's equity, changes in the equity. The balance sheet shows our balances at any given point in time for assets, liabilities, and equity. And then our statement of cash flows, cash coming into and out of the business during a period of time. So just once again, just kind of show you what these look like. This one is our income statement. So our revenues, our expenses, your revenues minus all your expenses equals your net income. And then again, just kind of showing you how it connects to your statement of owner's equity and how your equity connects to your balance sheet. So just again, just kind of a summary of the type of things that you'll see. When you look at your 10K report, there's going to be a lot more detail in this. This is just a very, very basic foundational stuff that I'm showing you here. When you look at your 10K reports, you're going to see a lot more detail. It's important to note that depending on your company, how things are reported, some companies report in thousands, others report in millions. So you'll notice that when you look at your financial statements on your 10Ks, and it'll say at the top of those reports whether it's reporting in thousands or millions. It's really just semantics. Obviously it's all in millions. It's rare to see something that low in thousands, but it's important that you'll notice that not all companies report in the same format, is what I'm saying. So you'll see it'll be either thousands or millions. It'll be designated as such. The other thing to note is obviously, is it reported in dollars or in other currencies? And when you're writing in your executive summary and in your discussion boards, please put a dollar sign. Please do that because it just helps it easier to read, right? Put a dollar sign. So task three on for this week, we're looking at the type of assets that the company has. And so I want you to have a good understanding of what a current asset is and what a non-current asset is. A current asset, as the name implies, is an asset that the company intends to utilize within the next 12 months. Current assets is an asset the company intends to utilize in the next 12 months. For example, cash, inventory, accounts receivable. We expect to use those three things in the next 12 months. Another example might be short-term investments. You'll see short-term investments as a current asset for some of your companies. We expect to use those in the next 12 months. Non-current assets, also known as fixed assets, are things like property, plant, equipment, patents, etc. We use those for greater than 12 months. Non-current, greater than 12 months. What you're going to be doing in task 3 in your Excel file is we're looking at what percentage of assets are out of total assets. So what percentage of your total assets are current versus what percentage of your assets are non-current. And I'll show you that here very shortly in the Excel file. And all this is helpful for us to be able to see how a company manages its overall resources. That's an important thing for management for a good manager to understand is how well we use our resources. The fourth task of your assignment for this week is really to deal with looking at how efficient a company is. How well does it manage itself? And so we have a couple of ratios that you'll be calculating. One is the operating profit margin. In this, we take our operating profit divided by our total sales. Gives us an idea of how much profit is made from total operations. Right? That's a great thing for any good manager to know because it helps us to set prices. Net profit margin, we take our net income divided by our total sales. Tells us how much our total profit is left after all of our costs are paid. So again, that's important because it gives us an idea of how much we have left to reinvest into the company. It also gives shareholders an idea if a dividend is going to be paid out. These are great to know because you're also going to want to get an idea of how your company is performing to the industry standard. And this is going to be helpful when you write your executive summary and also when you're looking at your Excel file. Get an idea of what how your company is performing to your industry. that the company's in. And the way you could do that is just do a simple search online, looking at your industry averages for the year. There's a lot of great publications out there. But you'll notice that like MSN Money and Yahoo Finance and a couple of other websites will have that information. So it doesn't have to be exact, but just get an idea of how your company's benchmarking in terms of performance. Are the margins high or low? What does it say about the company's efficiency, et cetera? That'll help you with task 4. And then the fifth final task for the assignment for this week has to do with retained earnings. Retained earnings are the profits that are held within the company. We use them to reinvest into the company. They're retained. That's where the name comes from. Retained into the company, retained earnings. How do we calculate the retained earnings? We're looking at retained earnings at the end minus the beginning. That gives us so ending balance minus beginning balance gives us the change. We look at this. Why does retained earnings change? A couple different reasons. Obviously, we have net income, we have dividends that may have been paid, and we have other adjustments like corrections. And so, why do retained earnings matter? It shows how much the company is reinvesting to grow the company. And so we're going to talk a little bit more about that because in the Excel file, you'll notice that there's an area where you kind of have to write in, about the changes. Any questions so far? We're doing okay. Got a couple minutes left. Want to be respectful of your time. But what I'm going to do next is show you the project and a couple of hints and suggestions. We'll also take a look at maybe one, if we have time, we'll take a look at one 10K report, just kind of show you some nuances. Good. All right. Cool. Let's keep rolling. All right. So let me show you. First, I want to show you the template. So to navigate there, of course, you're going to go to your content area. You'll go to the assignment area. The first thing you're going to want to do, obviously, is read through the instructions. This is where you're also going to access the Excel template. I did update the template, so I wouldn't necessarily use this one. I would use the one that I've sent you an email. It's also in the announcements area. It's just a little bit more streamlined and a little bit easier to interpret. And then within that Excel file, you're going to be responding to these 5 tasks that we talked about. So you've already selected your company. You went to the SEC.gov website. You found the most recent report. Now you're ready to jump into your Excel file. So you open up your file. It's going to look like this. And so a couple of things to look at. So task 1, we're looking at who our stakeholders are. We have investors, managers, creditors, regulators, and employees. I want you to tell me about how they're using that information, right? How does an investor use the SEC 10K information? How do managers use it? Creditors, regulators, and employees. So you're just writing out, right? What information they might be looking at and why they're using it, that type of stuff. So really, I'm just testing you on who these people are and why they want to use your company's financial information. The second task is on the balance sheet. And really, I'm just looking for the balances. So the cash balance, account receivable balance, inventory balances, prepaid expenses, if there are any, like prepaid insurance, etc. The property, plant, and equipment balance is also known as fixed assets. Any type of investments that the company might have. If they don't have any, just put 0. And then you'll total all these up. Now, I don't want you to just hand jam this number in. Okay, don't hand jam it because it's not going to help you. The total assets, I want you to be able to total them up. So equals, and then just go through and boom. Or I'm sorry, well, it'd be sum, but actually sum, open parenthesis, etc. Okay. And that'll give you your total assets. And same thing with total liabilities and total equity. So really, I'm just looking for the balances. Now, some companies aren't going to have the same names. These are very uh, general ledger type of names. Not every single company has the same exact account name. So I'm going to give you an example. Let's go into the discussion board. I'm going to pull a random student's link, and hopefully it'll work. Let's see. Eric, I see that you just responded. So let's see what yours looks like. Cool, very cool. Okay, so Eric, I hope you don't mind. I'm going to pick on you for a second, and I'm going to open up your company. And so here's Stryker to give you an idea. So I'm looking for their balance sheet. So the first thing I could come over here to sections, and I'm going to select the consolidated balance sheet. And that's just a real quick shortcut, by the way, just to kind of show you how to get there fast. And so what I'll do is I'll start pumping in the balances. You'll notice a couple things. Cash and cash equivalents. It's all cash. Just pump in that number. Okay. Don't worry if it says cash and cash equivalents. It's still cash. Right. So just pump in that number. Um so you'll pump in that number. Accounts receivable. Sometimes it'll say stuff like this, less allowance. That's fine. Don't worry about that. It's still accounts receivable. Inventory. Here's all our inventories. And you'll note this is very typical of a manufacturing company. You're going to have raw materials, work in process, and finished goods inventories. We're looking for the total inventory amount. So for Eric, he's going to punch in the total inventory amount into that part of the Excel file. Prepaid expenses, not every company has them. Most do. They prepay their insurance. So prepaid expenses, go ahead and give me that whole total. Don't worry about this part that says other current assets. This is fine. Okay. Now let's see. Property, plant, and equipment. These are what we call your fixed assets. Your company might just call them fixed assets, and that's fine too. So I'm looking for the total property, plant, and equipment, the net. So it'll be that number there. Investments. And this is working out real good for Eric because everything seems to be lining up pretty well. Investments. Here we go. We got short-term investments. Perfect. There might also be long-term investments sometimes not. But here I got short-term investments. So I'm going to use that number. And then when I do that, I'm going to go back and after I've entered all those in, I'm going to do my nice sum and add them all together. Then I'll scroll down to my payables. My liabilities and my equities. And I'm going to follow that same exact process. And again, it's okay if your company uses different names for their accounts. Very normal. You'll notice that your company might be like, hey, Dr. B, hey, my company doesn't call it that. It calls it something else. That's fine. Okay, it's totally fine. You'll notice that the chart of accounts for each company is going to be a little different, and that's okay. It doesn't have to be exact with respect to the names. I'm just looking for you to demonstrate your understanding of how to interpret the balance sheet and the income statement and the statement of cash flow. Balance sheet and income statement for now. Next thing that Eric would be doing is going to the income statement. You'll also notice some companies will call it the comprehensive income statement. The reason for this is because a lot of companies, they own other companies. They have what's called subsidiary companies, which is why they call it the consolidated statement of whatever. It's consolidated because it includes the subsidiary companies, which is fine. That's actually what we want. We want to see that. You'll also notice that the statement of income statement might not call it sale of goods or services. They might just call it total sales, or they might call it something else. Net earnings. That's what Eric's company calls it, net earnings. No problem. It's sales. It's just sales, right? Uh, or net sales. Here we go. Here's net sales. Sorry, I was looking at the comprehensive. Wait. Same earnings. Yeah, same thing. Net sales. Boom. There's your net sales. So you pump in net sales or sales of goods and services. Same thing. And then we're going to have our expenses. Expenses. So this will be net sales. And then we're going to have our expenses. We have got cost of goods sold. Cost of goods sold might be called something like cost of sales. It's cost of goods sold. It's the same thing. So cost of sales, cost of goods sold, you'll pump that in. Then your operating expenses, you're going to find a line item that says total operating expenses. So you'll pump that in. Interest expense, sometimes it might not be listed. Most of the time it is. And our interest expense in Eric's case they might not have interest expenses possible. Not terribly likely, but possible. In which case I might look at the parenthetical or the comprehensive, and if I find it, great. If not, that's okay too. Yeah, if the company might not have it, and that's fine. That means they don't have any loans that they have out, which is unusual, but it happens. Maybe they paid them all off. I'm sure they got them. Interesting. It's there somewhere. If you can't find it, it's okay too. And then your income taxes, going back to the statement of earnings, your income taxes will be there. There we go. Income tax. And you'll pump those in. Then we got task 3. These are your percentage, these are your ratios. So here we're looking for the percentage of total assets, and we're looking for it out of current assets. So what I'm going to do here is I'm going to go. I'm going to, well, first I'm going to look at my current assets. Now, what you have to remember are what your current assets are: cash, accounts receivable, inventory, prepaid expenses. Those are current assets. Okay, so having said that, what I'm going to do here for current assets, I'm going to go equals, open parenthesis, my cash plus my accounts receivable plus my inventory plus my prepaid expenses. I'll close the parenthesis. Oh, sorry. Close the parenthesis, and then I'm going to divide that by total assets. And that's going to, and then just multiply that by 100, and that's your percentage of total assets. Or just put it in percentage format, right? Just go percentage. And that's your percentage of total assets. You'll do the same thing for non-current assets. So equals, and that's obviously going to be the remaining assets. Your non-current assets are also known as long-term assets. That's going to be property, plant, and equipment, investments. And that, in this case, that's it. And you're going to divide that by total assets. And then you're going to identify what your most valuable assets are for both current and non-current. So my most valuable asset for current might be cash. It might be accounts receivable, it might be inventory. For non-current, it might be property, plant, and equipment or investments. Right? So that's what you'll do for task 3. And then task 4, we're also looking at performance ratios. So here we're looking at net operating profit margin. We're going to take our operating profit and we're going to divide that by our sales. So as you can see up here, that's not explicitly mentioned when it comes to your operating profit. So you'll need to calculate that, right? And the way we're going to calculate that is we're going to, or you could just type it in. your operating profit is going to be identified to you, right? And so we'll pump that it will pump in your operating profit, and then you're going to divide that by, I'm sorry, let me go back to the file. And we're going to divide that by sales. And then net income divided by sales. So you'll have to enter that part in. And that'll help you with task 4. And then task 5 is a written explanation of the change in retained earnings. And so what you'll do is you'll go to you'll go back. We're going to come back to your 10K report. We're going to go to what was the question? It was change in retained earnings, right? So change in retained earnings. I'm going to look at my uh, stockholders' equity, and I'm going to take a look at my changes. Here's my retained earnings, beginning balance, ending balance. I can calculate the difference. Ending minus beginning gives me the difference. And then, so what occurred that to happen, right? So what caused that change? Good question. It looks like we got our net earnings were this. We had cash dividends that were paid out. That's why there's a change in retained earnings. And then you might also find that as you're reading through the notes to the financial statements, especially when we get to our retained earnings, or um, we might find something of interest there of something like the dividend payment, etc. So here we go, capital stock. There might be something interesting here. So just write a little bit about that change, and that'll help you with task 5. Once you've completed your Excel template, then the next thing you're going to do is you're going to write an executive summary. The executive summary, as the name implies, is simply an executive summary. And what you'll be doing is you're going to be talking about those 5 tasks that you went through, just in terms of words, right? So here's task 1, for example. Here are the things that we did. Here are the stakeholders. Here are all my stakeholders. We analyzed the balance sheet and income statement. And then write in the calculations. Say, hey, these are the calculations that I found. Here's what they mean, right? So interpret it. What I'm looking for with respect to your executive summaries is I'm looking for your ability to analyze and interpret the information. As a manager, you need to be able to demonstrate your analytical ability to tell us what these ratios mean. Tell us what this information means about the company. And that's what I'm looking for in your executive summaries. That is what will set you apart. The difference between those letter grades is the level of analysis. So the more you're able to analyze, it's really going to make that big of a difference. So please, do everything you can to really, really analyze the hell out of this stuff. It'll help you, and it also helps you to really better understand the company. And that's what you'll do for the assignment. Any questions that I can help to answer?
Just a question on the formatting of the assignment.
Yeah.
So, task 1, is that something that you want us to fill into the spreadsheet itself, similar to what's in the assignment sample, or would
Yes.
that be so you're only looking for like a 1 or 2 line thing on that then?
Yeah. You don't have to be jamming a whole paragraph in. That's, just a couple of sentences.
It
Yeah.
looks like you actually already gave us the answers in the assignment sample.
In theory.
And all right, and the thank you for that.
But but
And
but but I'll tell you, Eric, you want to be kind of specific to the company as well, because you'll notice that as you're reading through the 10K report, these people are going to come up, obviously. So you want to kind of be looking for your stakeholders in your 10K report, and try to
mhm.
be, a little bit more geared toward the company specifically.
Got it. And then the executive summary, do we submit this entire thing as an Excel spreadsheet?
So there's two components to the submission. There's the completed Excel spreadsheet and there's the written executive summary in Word.
Got it. So a Word and then an attached spreadsheet that we give you as an XLS file.
You got it correct.
Got it. And for last question, so when you're dealing with something, for example, here like Stryker, where all these numbers are really in millions,
Yep.
do I change it over or do I just write somewhere all dollars as millions, or do you just know it and don't worry about it?
Yeah, just put it in as it is. So however Stryker, for example, reports it, put it in as Stryker had written it. So and it'll be fine because the reality is the ratios come out the same either way.
Mhm.
Whether you write it in thousands or millions, the ratio is not going to be different.
Yeah. And I see ratios reported as a ratio like 1 to 2 or as a percentage.
Yep. So for all intents purposes for this course, the majority of them will be in percentage.
Okay.
Yep.
Thank you.
Absolutely. My pleasure. Great questions. Any other comments, questions, or concerns?
A question about the length requirement for the
Sure.
executive summary. Are you
Yep.
looking for just completion on each of those questions, or is there a particular length we should be hitting?
So ultimately completion at a minimum. And so what does that mean? A page, page and a half, 2 pages, nothing terrible. It's an executive summary. I'm not looking for an essay.
Sure.
But to your point, Austin, obviously I want you to be able to demonstrate the task and explain the task, but I also want you to be very analytical. So sometimes an analysis can draw out a little bit depending on what it is, right? But yeah, I mean, it doesn't have to be anything terribly long, and also, try to include references, citations.
Perfect. Thank you.
Yeah, absolutely. Great question.
Can we have the recording, please?
Yeah. Yeah, absolutely. Of course. Yeah. I'll
Thank you.
post I'm going to post everything to the class to the announcements and yeah,
All right, thanks.
you're welcome. Great. Any other comments, questions, concerns before we call it a day and you guys rock and roll with your fun stuff?
Yeah, I wanted to ask again about task three. It's the
Sure.
analyze section. The example that you gave has, and I'm looking at it, the example has just basically like a list where it lists out the assets, the numbers associated with it. That's where we're pulling it over from the Excel sheet, correct?
Correct. You got it.
Okay. And then continue jotting down our analysis specifically in that section there. Or is the analysis done in the analysis section? Because I think that's what it has is a specific place in the example for analysis, which is the current assets and non-current assets.
Right. So the calculations, the ratios are part of the analysis. The written
Mhm.
part of the analysis plus those ratios should be included in your executive summary. So the idea behind the executive summary is kind of like you're presenting to, management, your analysis based off of your computations, and the numbers, etc. So that's kind of what we're looking for. Does
Okay.
that make sense, Ben? Or
It'll get better every week, I'm sure.
yeah, yeah, exactly. It tends to. So to answer your question, the first thing you're gonna do is you're gonna complete this Excel template. You're going to use the data that you've completed using the 10K report, you're completing the template, using the 10K report and the template, as well as
Yep.
any other resources that you're using, like the investor relations page or MSN Money or whatever, um, to assist you. You're going to include that part with your executive summary. Through your executive summary, you're analyzing, right? So you're demonstrating your analysis through the executive summary.
Got it.
Awesome. Cool. Great questions.
When recording our references, are we permitted to include them only in the Word document and not also in the spreadsheet?
If you could do both if you want to. It's totally up to you. But I only require the references in the document.
Okay, thank you.
Okay, great question. Awesome. Very cool. Well, hey, thanks so much again for your time today. I really appreciate all of you being here. It means a lot to me. And if you ever need anything, just reach out to me. I'll be happy to help you. I'm once again very quick to respond, and I'm looking forward to a great class with you all. So thanks again. Appreciate it.
Thanks,
Have
sir.
have a great rest of your day.
Thank you, sir.
Thank you.
Thank you.
Thank you.
Take care. Bye-bye.
Bye-bye.